I have a love-hate relationship with banks. They love my money, and I hate their crappy service. My name is Brandon. I have my master's degree in finance and nearly a decade of industry experience. That wonderfully helpful, energetic teller at the bank who greets you with a smile, they're there to help you with your checking account and your savings, right? No, they're there to push products on you. At least, that's where their bonuses come from, and how well they're treated by their managers, and how they're scored on their performance reviews, and how likely they are to move up in the bank. So yeah, it seems like that is basically the whole point of their job. Rip you off might be a bit harsh. We can say upsell you to get more money from you as a customer via costs and fees. Okay, but that's their job. Make money for their employer. What's wrong with that? A restaurant server will encourage you to buy more food, get more drinks so the restaurant themselves can make more. That's just doing a job. Here's where I have a problem though. Banks have continually pushed the idea that they are there to educate you. They are just there to provide a service, to advise you on complicated financial dealings. And then in the background, unbeknownst to us, they have aggressive sales targets. It would be as if the servers at all restaurants are the only place you ever learn about nutrition, and they're a little quiet on the facts. So we're not sure if the food is even healthy, so you can't fully understand, and the whole experience is a little fuzzy to you. So I say, be aware of what's happening at your bank. The friendly people you go see to help you with your money are more accurately helping themselves to your money. Hey, wait a minute. My bank told me it was a good idea to have multiple credit cards. One for online purchases, one for groceries and everything else. This actually happened to me. They signed me up for multiple visas because they said it would help me. Not different cards with different benefits. The same exact card, just have multiple of it. Why? Well, it turns out that lady has sales quota, and she got to make an extra sale off of me. As a result of all this, we all need to get serious on educating ourselves about finances, learn about what options are available to us. Now, we don't need to become experts in absolutely all of it, but we should all work to develop a strong base understanding and understand how people might make money off of us so we can better weed through the biases that people have and the sales tricks. I think a good analogy here is that we don't need to study and become certified dietitians to know how to eat healthy. Similarly, we don't need to get degrees in finance to be able to manage our money and investments well. We just need a good base amount of knowledge, and then we can get outside help when it's needed. At the end of the day, no one is going to care more about your money than you. Well, actually, lots of people are very interested in your money, but no one, certainly no business, is going to be fully on your side. So where do we learn? The number one principle is independent sources. Do not get educated from the places who will also make money off of you. That would be like asking a car dealership, is this a more expensive car worth it? Always ask yourself what financial incentives or other biases could this source have. Official government resources can be really dense, but also helpful and a source of truth. And they really do make attempts at making things more user digestible, with summaries and using plain language to explain stuff. For tax matters, things can definitely get complex, but ultimately the tax code is written out for all to see. And there are briefs that condense hundreds of pages of code into something mortals can mostly understand. For investments in banks, consumer protection laws and what businesses are allowed to do are written out. So does what you've heard line up with it? Google it to get down to what regulations and laws actually say. This way, you'll at least find out what things are truly fishy. You're not going to become a financial forensic analyst, but you may at least be able to say, hey, this company said XYZ, but that looks like it goes directly against what this regulation says. Maybe I should look at other options. Also, go to multiple financial organizations, not just the one you've always been at because your parents signed you up for an account when you were like 5. Years ago, my wife walks into her bank that she's had for like 15 years to cash a check or something. With a big smile, the teller asks, how are you? How's school going? Great, thanks. I'm actually finished school now. Oh, that's great. I'm so excited. You're no longer eligible for your free student offers, so I'll upgrade you to our paid checking plan and our paid credit card. No additional benefits, just fees. Okay, thanks. A good source can be trusted friends and family who do not have a direct financial interest in your actions. That great friend of your dad who seems really smart and who sells investments and will give you a good deal. How do you know it's a good deal if he's the only one teaching you it's a good deal? Mixing finances with personal relationships can also get messy. If business goes sideways, does that now spill over into the long-term personal and family relationships you have? You need to be able to trust who you work with, sure, but you can also build trust in a relationship that's strictly professional without personal or family ties. We should maybe choose our professionals based more on their qualifications and less on the fact that we or our dad knows them. When I was finishing up my degree, I had a sort of pre interview with a national investment firm. It consisted of a few questions and then making a big list of my network, everyone I knew, and guesses of their net worths, and sending it back to them to grade. Did they care about how educated I was? No. Did they care about how driven I was to learn and find the best ways to serve people? No. Did they care about anything other than how many people I knew and how much money I could potentially get from them? I don't think so. I was a student. I didn't have a prosperous network. I just knew a lot of other students. I didn't get the job. A few years later, I met someone who did land that job. They didn't have a financial education. They didn't have any other financial jobs. They were in the middle of their career, knew a lot of people, so a good network to land clients from, and they had sales experience. Oh, welcome aboard, new financial advisor. It didn't take me long to realize I didn't want that job, and I would never want my family to be that company's client. Online sources can be a great source of help. YouTube, blogs, forum posts. Very often there isn't a direct financial interest. If there is, like they're pushing something and saying, here's the best product and click on my sponsor link to get it, well, then make sure to back up what they're saying with other sources. Or skip the sponsor bit and just take in the free info they're providing. And online sources, because they can't get very specific on your life, are often very limited to general advice that may or may not really fit. So go around trying to piece together your answer from multiple sources. You know why I love Dave Ramsey? Not because he gives the absolute most comprehensive, good for all time and for everyone advice, but he gives solid advice that some people need to hear at some point in their life. And he responsibly doesn't push any aggressive strategies that could work out, but could also lead to big financial blowups. It's basic stuff that anyone can follow, and it can get you to a better place. And I don't mean heaven, I just mean less in debt. I hope that line lands well. A big word of caution here, though, for online sources. You're going to get randoms like myself post videos, but I mean, at least I have industry experience and a graduate degree. And you'll get anonymous anybody's with a keyword reply to that Reddit post or a Twitter thread with what they think is best. Don't go basing your whole plans off of that one post or what that one community online says. You're going to need to piece things together, building upon what you know over time. Do you remember that lesson from our English teachers about primary and secondary sources? The primary source, eyewitness accounts, raw data, original materials, straight from the horse's mouth. Secondary sources are then discussions and interpretations and opinions about the original thing, like news articles and blog posts. We should be putting more trust in the primary sources because they're closer to the truth. Well, someone's Reddit post is more often like a third or fourth or fifth source. Opinions and half-remembered facts about a secondary source, passed around and heard about online, and then plopped onto social media. We need to be taking some things with a big grain of salt. Except my videos, just take them all at face value, take in everything. Speaking of products to push, this is probably as good a time as any to introduce this video's sponsor. This video is brought to you by Money. Thanks, Money, for the support. Big game changer in my life. You would not believe the things people have traded with me in exchange for money. I get food all the time with it, electronics, water. I've gotten access to the internet for money. The list goes on and on. If you haven't yet tried Money, I'll be the first to tell you to give it a try today. If it's not working out for you, you might be able to just get a refund on your money. Just like try offering to give it back. Otherwise, you can always stuff it under a mattress. Thanks again, Money, for the support. End sponsor segment. Turning the page a big push in the financial industry in the last decade, and I see this as a big win, has been fee-for-service financial advising. For investing, financial planning, legal and tax advice, you now have the option to pay someone directly for their time and expertise. Maybe you're thinking, what, I couldn't pay someone before for investments and advice? No, not really. The model for decades has been go to a broker or advisor, and they sell you stuff and make commissions for the sales. They sell stocks, investment funds, insurance, and sprinkle in some advice and strategy on top. Now, the fee-for-service model, paying someone directly for their time, takes away this commission sales part. It'll be more expensive upfront because they don't have other ways of making money off you baked into their business model. You don't talk to them for free, and they don't push a sale on you. Because again, on the flip side, you can go to a bank and have a talk for free with a banker about savings options. How could they possibly work for free? They can spend time with you for free because they know they might make money off you shortly. And their free advice is going to be biased as much as it can be to push you towards the ways they can make money off of you, if they're any good at their job, that is. Another credit card, a line of credit, an additional account with fees. investment funds with high fees, whatever products they can push on you. Do you know what used to be the role of bankers? They weren't minimum wage employees with no experience but a 6-week video training program. It used to be a career people pursued with a high degree of apprenticing because it was a relationship-based position meant for the long term. That role was the face of the bank, able to offer financing and flexible products to customers. It was respected, it was well paid. Nowadays, the bank branch is a place for people to work and get their foot in the industry, cut their teeth, and if they're any good at selling, they quickly leave that role and move up to investment advisor, where they just deal with people who have more money, or mortgage specialist, selling mortgages, or any other higher role where you can make more money from commission sales. Traditionally, when lending to someone, a banker would take their time and look at the 4 C's of credit: character, capacity, capital, and collateral. The last 2 are straightforward. How much capital, money, do you have in reserve if challenges come up? That lowers the risk for the bank. And are there any assets you are laying down as collateral, things that you'll be forced to sell to pay back the borrowed money if needed? Capacity looks at your whole financial picture, all sources of income and ongoing expenses, what other debts you have, etc. Character is complex. Character is a judgment about your honesty. Do you stick to your word? Have you had long-time relationships with others and other businesses? That's too hard to measure now at your local bank. Like what? We're going to ask about you and your community and develop a relationship with you over years? Too expensive, takes too long. So now we just slap a bunch of past bills and missed payments into your credit score calculation. Everything is boiled down to a single number. This guy's a 400, he's bad, swipe left. This guy's a 750, pretty decent, swipe right. So the whole character relationship bit, caring about things over the long term, kind of important, kind of gone. And that flexibility bankers used to have, offering things when it made sense with the right people, based on an actual relationship, that's gone too, because that's too risky. National offices for banks now just run and maintain their algorithms on clients. The minimum wage worker plugs in your numbers, the algorithm spits out a decision, yes, no, easy work. Everything is boiled down to the numbers on a spreadsheet. The banker doesn't need actual skill, so they get paid less, direct savings for the bank. And it doesn't matter if turnover is higher now, because they'll just train someone new in a few weeks. So that all sounds like a ton of fun. Here's the thing though, I just did this big long rant against bank roles and how they suck. So do I hate banks? Should we be mad at them? Like, they shouldn't be doing this? No, I don't think so at all. They're a business, they try to grow revenue, cut costs, make more money. Seems like they're doing an all right job at that. For us, we gotta be informed consumers. The loyalty from big businesses is pretty much dead. Have you noticed that fun thing they do? Cash bonus for new customers only. Discount fees in the first year for new customers only. Better interest rate for a limited time for new customers only. They sleep on their existing customers because they've done the math and enough of us will just stay no matter what, and then go and target new customers with tempting offers, bringing in fresh money. So we need to get in the driver's seat and pick and choose what banks fit us best right now. And if that changes, we simply up and move on to the next best option. Banks don't seek to build relationships with us like they used to, but hey, it's just business. And we can do the same. I hope this was helpful. Insightful maybe? Or maybe you're like, yeah, no, banks do suck. I knew that. The good news though is that personal finance, investing, budgeting, all the actual facts there are not complicated. There's not a lot to learn. The biggest challenge is the personal part of personal finance, where our preferences and emotions and all that come into play. But the facts you can learn in not that long, and you don't need to rely on a bank teller to teach you all you need to know. Was this video helpful or not? Give me a thumbs up or down to let me know. Do you have any wacky examples of banks trying really hard to sell you stuff? I'd love to hear about it. Post a comment down below. And thanks for tuning in. Hope you have a great day.